Hi, I'm Kevin Harrington, and I'm an original shark from the hit TV show Shark Tank. And today I'm with Andrew Rowland of the Roland Companies. Now, he is in the destination real estate business. He's a developer, a private equity fund manager also. And the Roland Companies is a second generation company with a 40-year track record, of which he and his father Pete are at the helm. Now, his private equity firm, Kona Development Partners, provides retail investors the ability to take ownership positions in large-scale real estate developments. Now, Andrew, this is a pretty great opportunity, and I want to thank you for being with us here today.
Thank you for having me.
I said a mouthful there, but I just want to know what is it that you do that makes you unique in the marketplace?
So we make available to accredited and individual retail investors the ability for them to invest with us in our large-scale real estate developments. But what really sets us apart is that we have a no debt capital structure and business model. So instead of banks or institutions having those prime positions, it's our like-minded accredited investor partners that are really in the best possible position to succeed and profit from their positions.
Sounds like the small guy gets to be treated like the big guy. So Andrew, before we get to know you a little better and talk about the exciting things you're doing, we must address what's on everyone's mind today regarding the economy, inflation. Hey, let's talk about the volatile stock market, right? Does any of this worry you?
You know, I thought maybe we'd start off with some softball questions, but I guess we're just going to get right into it.
Yeah.
You know, what doesn't worry me is that what's happening right now is part of the natural cycle of the economy. 2008 was something that was abnormal, of course. The recent COVID pandemic, something that was abnormal.
Right.
But what we're seeing now is again, part of the natural economic cycle. And we can always look at the past and lessons learned to help us react and adjust for these current times in the near future.
It appears that the year 2008 has some significance to how you actually operate your business today. Is that correct?
2008 was a learning experience, and more importantly, the years after 2008
Sure.
were certainly a learning experience. I hope that I never forget kind of that sense of desperation that existed during that period of time, because it very much shaped my view on capital structures, probably reshaped my worldview and on life itself, to tell you the truth. But you know, we're much better, much stronger today as a result of those lessons learned. As I said before, prior to 2008, we had moved to a model where we used private equity for acquisition, but we hadn't at that point fully completed that shift, and we were still dependent upon capital markets and debt for repositioning, renovation, infrastructure development. It was a very hard lesson learned, being in a spot where we had just closed on a property in December of 2007, and of course capital markets dried up before we could fully reposition that particular property. So as a result, today we've completely moved away from being dependent upon institutions and capital markets and certainly debt through this acquisition and repositioning or development phase. And it is what we believe to be the most effective and the most efficient business model that has the greatest opportunity for success for both us and our partners.
Fantastic. What are your predictions regarding the long-term effects of what's happening in the market right now?
Well, in the long term, the economy will come back bigger and stronger than ever. That's what history tells us.
Right.
In the short term, it's kind of a double-edged sword. For working class and middle class people, they're obviously going to get hit the worst and suffer more so than others. However, for individual investors who have some discretionary income, sizable investment portfolios, and maybe some experience with past cycles, they're actually going to be in a position where they can take advantage of the market, take positions that in the long term will allow them to see significant gains, and in the short term hedge against the inflation and the potential downturns that we may see.
Yes. I'd like to get back to discussion about the market in a little bit, but I actually want to kind of go back to the beginning and hear all about your start. How did you get started in real estate?
Yeah, great question. I was literally born into the destination real estate business. Some of my very first memories of life was a young kid on the Outer Banks of North Carolina, where my father was developing what would become a series of some of the most successful ground-up development beachfront projects in the state.
Nice.
So my early memories of life are on construction sites or in sales rooms. And as I grew up and through my adolescence, I got to see the sophisticated marketing programs put into action and evolve over the years. And then once I was in my early 20s, I took an active role in the business, and over the past 20 years have progressed that to the point where today my father and I are still working together.
Yeah.
I'm taking lead roles throughout the company and introducing new aspects to our overall business model and capital structure. And my father today and I are still working together and still developing destination real estate.
That's fantastic. I've had a family business myself for many, many years. I worked in my dad's restaurants when he was in the business, and then he and I worked together in business for a number of years. And what a great mentor to have, your father. And so it sounds very exciting for the future.
I'm very fortunate to have my mentor with me all along the way and still with me today, for us to be able to basically reminisce and use perspective as an advantage.
That's great. So Andrew, I want to know, did you know at a very young age that you were going to be a developer? Was this what you aspired to?
You know, you would think that'd be the case, but I actually developed a very strong passion for auto racing at a young age.
Okay.
I got involved in the World Karting Association and competitive kart racing.
Oh, wow.
Started with becoming a local track champion, then a regional champion, eventually a state and a national champion.
How fast do those cars go, by the way?
70, 80 miles an hour.
It's pretty fast for a little go-kart.
Even for the young kids,
Right.
And they go up to well over 100 miles an hour
Wow.
for the adult classes.
Interesting, right.
But so I did that, and then even evolved into stock car racing and racing regional series of the NASCAR division. But I've always set really high goals for myself. Always had a lot of aspirations, and in my early 20s, I was kind of at a crossroads, and I realized that it was the real estate business and that industry that I grew up in,
Right.
where I had the best opportunity to achieve those goals in life, as opposed to auto racing. So I had to put that passion to the side and then focus on the family.
I think you made a good decision. I mean, racing, you can monetize that industry, but real estate is where it's at. And this is what your family business has been doing for 40 years. So it sounds like you made the right choice.
Yeah, well, there's a saying, the way to create a small fortune in auto racing is to start with a large one.
A large one. I've heard that. Okay, great. In the beginning, we talked about destination real estate, and this is the specialty of Kona. And I just want to know, for those that maybe don't know, what exactly is destination real estate, and how does it differ from other types of real estate deals that you guys do?
So destination real estate is real estate that is typically located in resort type areas. It's also the motivation from the destination real estate buyer is different than that from a primary residence or even a second home. Destination real estate typically is well, it's never a primary residence, and it's typically not even a second home.
Okay.
It's typically a third home, fourth home, fifth home, or purely an investment property. And the buyers are motivated to make these purchases because there is an investment potential of some type there,
Right.
whether it's rental revenue or appreciation over time or a combination of both.
Right.
And they get the added benefit of use and enjoyment during the period of ownership or during the time in which they hold said real estate.
That's great. And this is your niche, this type of real estate transaction.
Absolutely. So how it's different from the rest of the real estate industry is that we typically are drawing from a large pool of potential buyers that are spread out over a very large geographical area. For instance, our current project is on the Kona coast of Hawaii. Target markets for the Kona coast of Hawaii and Hawaii in general are Southern California and the Bay Area primarily, but also Seattle, Phoenix, Las Vegas, Dallas, Houston, major cities in the Western United
Right.
States. So it takes very specialized marketing programs in order to attract the attention of those buyers, and then to basically move and focus their attention to some place that is typically far away from where their primary residence
Gotcha.
is.
Yeah, it's a great niche to be an expert in.
It absolutely is.
Yeah. In addition to destination real estate, another division of your business is your private equity firm. How does this relate to your real estate development?
So it's directly related. Our process in developing a project is essentially a four-step process.
Okay.
Step number one is we raise all necessary funds privately through our own in-house private equity fund so that we can cover acquisition and infrastructure development costs without having to touch a dollar in debt.
That's fantastic.
So it is the very first step of the process.
It's a great first step. Raise the money, right?
Exactly. The second step is the development of the infrastructure.
Right.
Third step would be the marketing of the real estate. And the
Gotcha.
fourth step, of course, is the sales, the great part.
Is that the cash out?
Exactly.
Taking the chips off the table
Exactly.
type of
That's,
thing, right?
that's where everybody gets really happy.
That's great.
Yeah.
I love that.
But so it's an integral part, and it's the very first step. And more importantly, it's what allows my company to not have to become dependent upon debt during the acquisition and development phase, which is the primary risk of ground up development. So our private equity fund is also creates that specific and that unique opportunity for investors to participate with us and to be able to position themselves to take advantage of that very strong upside potential of these types of projects without the risks that's commonly associated with the debt component that most developers are reliant upon.
That's great. A four-step process and raise the money, cash out. It's a great process. So Andrew, you grew up in the business of destination real estate development, also marketing and sales, but I want to know, where did you get your experience in private equity and finance?
So over our 40-year track record, we've never stopped learning, right? Our business model, our capital structure has continued to evolve. With each and every project, we learn how to become more effective and more efficient. It became very apparent in the aftermath of 2008 that being dependent upon debt and the capital markets was a vulnerable position. Now, prior to that, we had already shifted to a model where we used private funds for acquisition, but we just hadn't quite completed our eventual destiny, which was to actually take that private capital model and extend it all the way through the infrastructure development, or on some projects, the renovation or repositioning, and to not touch debt until we get into a cash flow positive situation. Between projects, between a Mexico project that wrapped up in 2014 and a Fiji project in 2017, I took that period of time, a small hiatus, if you will, to really focus on personal education regarding the private securities market and private equity.
Nice.
I focused in on multifamily real estate, and I learned about the general deal structure of how private equity and real estate are combined. I also looked at the tech industry, and from that I got the rule that never touch a dollar of debt until you have cash flow, right? And then also I was living in Texas at the time, and I got involved in the energy industry, which is potentially a very risky type of investment. And they rely a lot on private equity for that industry, and I got to learn more about how to present risk and reward from that particular industry. So I took this knowledge and really kind of cherry picked certain things from each of those industries that I learned about how they leverage private equity, and then applied them to my own. And today we have a capital structure and a business model as a result that we believe is probably the most effective and efficient way to go about taking on ground up development projects.
Yeah, very exciting. I like how you hit a point. You were in a family business being very successful, but you said, I need some self-education. And you came back and put your time and effort into getting your arms around the whole equity market, the finance marketplace, and that has given you now the ability to bring all that knowledge back to the family business. Great job.
Absolutely. You can never stay stagnant. You can't stay in one place. You always have to be learning from from the experiences you have in business each and every day.
Absolutely. You said that you don't use debt until you get cash flow, which that sounds like a good concept, but private equity can be more expensive than debt. So my question for you is, why not use debt in those early phases?
While debt on paper can potentially be more profitable, it represents the single largest risk factor in ground up development.
Right.
If we can remove the debt component, we remove the risk associated with it. A project during its acquisition and infrastructure development phases obviously doesn't have cash flow. If something were to affect your timeline or some unforeseen circumstance occurs, for instance, like COVID that we recently experienced, that can be detrimental for a project that's carrying debt and has debt service.
Sure.
We us and our investors, I'd prefer that we can have the peace of mind of knowing that we don't have this debt service that's hanging over us, that's looming over us. And we have ultimately much more flexibility and resiliency in our overall capital structure and our business model that allows us to continue every day to make the right decisions that's best for the project, not necessarily decisions that have to be made in order just to meet debt service or whatnot. So there are some very clear advantages to going the private equity route.
Yep.
And peace of mind is something that's
Peace of
priceless.
mind, a lot less risk, and after all these years you've been doing this, you really know what structure to use for the different transactions.
Absolutely. As I said before, we've never stopped learning. We're continuing to evolve the model with each and every project.
Andrew, thank you so much for joining us today. And I want to make sure that you visit investinkona.com to get started. And by the way, click the button, schedule a call, and Andrew and his team will be available to show you how to get started. Thank you, Andrew. It was great being with you today.
Thank you so much. It's been a pleasure. And I think we should turn off these cameras and talk about an investment.
Let's do it.
Thank you.